Hi everyone, this is Wafa, and I'm back for another exciting interview. Today we have Ty. He's a senior associate at an American PE fund in California. I'm really excited to share this interview with you. So without further ado, Ty, please, the floor is yours. Introduce yourself.
Awesome. Thank you so much for the opportunity. I am, like Wafa mentioned, my name's Ty Umoh. I live in the lower middle market private equity firm. Recently joined the firm there. Prior to that, I worked as a senior consultant doing distress credit and restructuring. So helping companies in dire strengths, so helping them with the financial analysis. Prior to that, I was an investment banker, 2 years in New York doing M&A, and then decided to move to Houston and spend some time in London doing oil and gas because I had grown up in energy. My time now is mostly spent doing thinking as an investor in private equity. So mostly I would say I would kind of layer it into three buckets. I would say it's mostly focused on sourcing, execution of deals, and portfolio management. So St. Cloud basically focuses on, we'll write checks from anywhere from, I would say, $3 million to $20 million per transaction. We're flexible across the capital structure. So thinking convertible debt, term loans, just understanding risk and how we can best help companies grow. So yeah, that's about it.
Tell us more for those younger people who are watching us today. What is exactly the role of a senior associate in a PE firm?
You're expected to not only do the analysis, so you're building LBO models, but also you're sourcing the deals. So when deals, typically investment bankers, they might bring you a deal through what's called a confidential investment memo, which basically states what the company does, where the market is, what the growth opportunity is. But you have to, based on our metrics, we'll basically try to figure out, does this business fit our goals, right? Because we certainly have what we kind of metrics that we're looking for, and what's the minimum equity value that we need to put in, meaning i.e. cash or some kind of debt to get a certain returns. So the more money you put in private equity, the worse your returns are. But you have to fund it. You have to basically use debt to lever up the company to figure out what the returns are going to be. That's sort of the analysis that I do. And then obviously we've got a bunch of portfolio companies that we own, and my job is to help with monitoring those. So reporting analysis, spending time with the management team, flying out on site visits. Yeah, that's the general sense of the senior associate.
How did you handle the stress and the pressure in your early years versus how do you handle it today?
If you're going to work in certain, as we call it, high finance, like investment banking or private equity, these are very intense careers. So you have to make time for, if you're going to be working, especially investment banking, like 120 hours a week. So I think for me, it was really important for me to have outlets. So like maybe, spending time, making sure, hey, working out, I think after like 7 or 8 p.m., I would step out, go work out for an hour, come back, shower, and then grab dinner and then go back in the office. There are certain, it depends on the group as well, right? Some groups that's kind of frowned upon to leave. So, but you have to find what really makes you tick. For me, I had to be able to work out doing, at least once a day. Investment banking is tough because you have to get used to the idea that you're going to be sleep deprived, and you still have to be able to be really sharp, even late during so even at 2 a.m. you're still expected to have that attention to detail when you're sending stuff out to your associate if you're an analyst, or stuff goes out to just senior people because you have an eye, just like any other organization hierarchy. So that's the biggest thing. So I think for me it was just figuring out how to spend 1 or 2 hours away from work, i.e. gym or going running, just to get a breather.
Amazing. How long do you step out for usually?
That's it, an hour.
And okay, what?
But I'd have my phone tied to my hip, so.
Yeah, You did, I'm not surprised. I did as well back in my banking days. And I even filmed a video, which I'll link above in the info card of people who contacted me to work on their work-life balance and their health and wellness, because they told me that, hey, when I work out, I can't stop thinking about work, to the point where as I'm doing squats, I'm checking my emails. So that's next level. Well, but
Yeah.
we've all been there. I truly appreciate how you make it really important for you to step out. How do you feel about, that work-life balance, when it comes to working? If we take fitness, for example, did you put yourself a pressure of going every day? Or did you just go whenever you felt like it, whenever you had the possibility as well? Like, what was, the behind
I
it?
th- yeah, certainly. I think there are a couple of things that I made. So there's two things. During the day, I wouldn't eat anything that would be high on starch. So if I ordered food, it would have to be something where it wouldn't make, like beans. I wouldn't eat like something that would make you sleepy. So nothing really heavy during the day. And then because you get into a slump where you're in banking, you get to order food in, you pretty much can order food that's probably not the best or healthy, most healthy food in the world. So I would typically try to eat as healthy as possible, and then work out. I try to get it. I wouldn't go so max. Like I wouldn't. The most I would go is without working out is 2 days.
It sounds like what was most important to you whenever you went to work out was more to step away from the office, just to relax and unwind and recharge, rather than a fitness goal. And that's why it's really important, I think, to know your why, especially in those fast-paced industries when you work 70-80 hours plus, because you don't have control of your schedule. You have so much on your plate. So that's why I always share with my clients, hey, why don't you, if your goal is to lose a little bit of pound, like lose a few pounds, or get a little bit fitter, or develop a little bit more of self-confidence, why don't you break it out in small steps? Instead of working an hour, let's do 5-15 minutes every day from home,
Mhm.
instead of doing 1 hour on a Monday, nothing, and then go back on Friday. So I think, yeah, to your point, know what you step into. You're going to learn a lot. And depending on your why behind working out, you can make adjustments that make you feel aligned with it. Okay.
Right.
So now I really want to know, you mentioned working in banking, and today you're a senior associate. How did you manage to make the pivot from banking to PE as you were a senior associate in banking? Because that's rare. Usually you would just
Yeah. Right.
pivot before.
Correct. It's actually very hard to do it post MBA. You have to have some, because when you go to business school and come out, you're going to be competing against, when I mean business school, I mean MBA, you're going to be competing against people who did private equity prior to business school. And obviously there are limited spots. So I think for me, I wanted to kind of, my goal initially was to, what are some of the skill sets that I need to continue working on post business school to be a CFO? And, I did want to work in private equity, but it wasn't something that was, I just knew I needed yeah, also, for me, it was also important to, I think banking was more P&L focused. I learned a great deal in how companies work. I felt like one of the things about banking was, even though, I gained tremendous insights and perspective into how, just the market in general. But I felt like our engagements were limited to the length of the transaction. So I wasn't able to participate in the product growth that resulted from our financing and advisory. So wanted to really go into more, I think I knew I wanted to go to a role with more operational, lasting impact. That's where FTI, basically my consulting for experience came in. So I did financial restructuring, because in restructuring is a completely different way of thinking. You're really trying to improve operations of business. You have to understand there's multiple stakeholders, and you're building 13-week, what's called 13-week cash flow models, which you're trying to figure out just how do you get a company to function currently and on a go-forward basis. But yeah, I mean, this opportunity was sort of, it wasn't something that I was looking for, but it sort of fit the narrative that I was looking for. So what, how do they look to improve companies? It's more long-term view on things, and it's more operational. And then you're thinking as an investor versus in investment banking, it's more transactional work, right? You're the advisor, you really don't own. So, but yeah, I wasn't, it was, for me, it was more big picture. How do I be, what goals do I need to, set to become a CFO in, 10 years out? Let's go to investment banking. This sounds exciting. I'm learning a lot. And then let's go to restructuring post MBA, where I can get the operational experience. And then, it just happened that I had M&A background and I had restructuring, which are polar opposites, because one's thinking very bearish, but you learn a lot in restructuring. We help companies in bad times. And M&A, you're helping companies acquire each other. You're doing LBOs as a banker. So it was a good, perfect skill set in hindsight. So
what specific advice would you give to other senior associate working in banking currently who are looking to do the same pivot, but think that they may be too late?
Yeah, I mean, it's a people's business. So I would say I would say numerous coffee chats when I was in business school. I was even willing to work for free during business school when I was in business school just to get the experience in private equity. So don't be when you're in business school, or if you go to business school, don't be opposed to working for free. Call it an internship, unpaid internship, whatever it needs to be. But yeah, having coffee chats with industry professionals and getting, because getting a chance to understand what they do on a day-to-day basis and keeping in contact. And that's essentially what I did, right? Because it's people's business, and you never know what happens. There's typically one slot or two slots. And and also another thing to look out for is if a fund's raising basically raising private equity firms raising a new fund, they're typically going to need bodies and people. So that's typically nothing to look out for. I would try to have coffee chats with someone, a senior associate at the firm, and then maybe an MD or whatnot, just getting a chance to understand their day to day, and then networking, right? Because that's a long-term game here. If you're trying to get out in space, yeah, not going to business school isn't necessarily going to help, but it's if you're associate at investment bank and maybe 3 or 4 years in, a little late, but it's not impossible, I guess, in my case. But you just have to network.
Would this strategy be different for a second-year senior associate in banking that's doing really well versus year 4 banking senior associate who's a little old for the industry, for that pivot?
Yeah, I mean, at that point, typically, you're kind of quote unquote too expensive for the PE shops. But yeah, I mean, I think it's still going to be coffee chats, meeting with people, and kind of. And I think also as a banker, you're working with private equity firms, right? So if you build relationships with portfolio teams, or if you're working on a buy side engagement and you do a really good job and you keep in contact, that's one of the ways, because basically you're on the other side of the desk from them, right? Because I've had friends that are lawyers that have pivoted to finance, but the way they did it was through networking. And if I had an option, if I was in private, if I had an option of hiring someone that's a lawyer or in investment banking who I've worked directly with versus going out in the street and interviewing random people, I'd rather pick someone who I know your quality of work. I mean, a lot of finance, it's learnable, right? You can learn this stuff. It's just, yeah, I'd say the biggest thing is like the direct relationships that you have and try to leverage those relationships. But we find alumni from your schools, right? That's one of the ways. That's what I did too. I would send out emails and have coffee chats through direct alumni, because I went to Rice, and which is in Houston. It's a really elite school in Houston. But yeah, I reach out to alumni in that space. LinkedIn is something that you can look at, right? Look at alumni space. Have coffee. Typically, people give you 10 to 15 minutes of their time. Talk to them. How do they, how are they thinking about the whole process? How would you you're looking to make a pivot? What do you do? They'll generally, and then ask if you can have another chat with someone within the team. And what ends up happening is once a position opens up, we're like, oh, okay. Do you remember that guy, Ty? Yeah, he was here like 2 months ago. Let's bring him in for an interview. It's just how it's how you have to be, you have to be in basically in, if you communicate enough with enough people within that, because finance is such a small world too. So they'll generally remember if you try to keep it, really good impression on people. So that's what I did too. But it doesn't pay off immediately, but over time it will pay off.
Absolutely. Yeah, I agree with what you shared. Be patient and don't be afraid of rejection. How did you deal with the frustration of people that you reached out for advice, for, career help, and, when you were searching a job, didn't respond?
I didn't take it personally. I knew that they were busy, and also I think it helps as a student, right? Most people are willing to help students out versus because you don't need a job immediately. Versus as an if you're like working and asking for a job, it's like more pressure versus a student. It's like, oh yeah, it's an invitation. I remember I was an MBA student once, and they'll have you, 10, 15 minutes. But yeah, for me it was more volume than getting to talk with as many people as possible, and you start seeing a theme, how they think, and what they look for. Yeah, and that's how I sort of crafting my story. Because in finance, it's really important to understand. And also, when you're interviewing and talking to people, if you have to, it has to make sense from why you move from point A to point B. So, like I mentioned earlier, I did banking. I wanted more operational experience. That's why I went to restructuring within consulting, and I got that. And now PE makes sense because I want to, instead of giving advice, I want to be a long-term investor, which is a completely different skill set. So, but I couldn't get into those. I can get into private equity without banking or consulting and understanding restructuring. But yeah, the story really matters. You have to be able to, people have to understand why you went from, job A to job B and what it is you're looking to do in your career. What's the long-term goal? And, I think most people are decent, they're willing to help, but, I would have as many information coffee chats and try to, as you do a bunch of those, you're going to be able to, it's going to help you craft your story better. That's what I did.
I love it. Absolutely. Tell a story, be patient, be curious and open-minded, be ready to work a lot and learn a lot and adapt quickly. All right. Now, tell me, what were the 5 career transitions that you were considering while you were a banker? I know a lot of people in that position typically think of, working in corporate finance, working in PE, in VC, in startups. Tell us more about those top picks that you had in mind. And if you could, in a few words, describe what each role entails according to you.
Okay. Yes, finance is super diverse, and that's what I like about it. But let's start with investment banking, right? Investment banking, it's basically your intermediary or a liaison between capital providers and people that need capital, right? So whether it be an IPO, debt offering, equity offering, basically the middle person. That's what investment bankers do. You've got private wealth, which is completely different. It's part of as a subset of asset management. You're managing rich people or institutional capital and helping them deploy their capital in different spaces, right? Whether it be equities, bonds, high yield debt. You've got also private equity, which we talked about earlier. You're sort of, let's say, for instance, the best way to explain private equity is, let's say a company's worth $100 purchase price. You write a check for private equity. You write check for $20 or $30, let's say $30, called equity. The $70 is going to be funded through either debt, combination of debt, or pension fund and universal endowments called LPs, other people's money essentially. You're levering up the company. The goal is to improve the operations so that when you do sell it, you get a certain return because you have a hurdle rate. Let's say the hurdle rate's 25% IRR, right? Internal rate of return, which is, think of it as risk adjusted return. Yeah. So if you put in that example, you put in $30 and let's say 5 years out, it's worth $1,000. That's when the numbers work, right? So think of it like flipping a house, but with companies. They're only dealing with companies. Venture capital is different, right? It's more private equity. You're dealing with later stage companies versus venture capital. It's more early stage. So you're doing startups. So that one's more of, you might have 10 investments, but maybe one or two are going to work out that are really big, and the other 8 are going to not do well. So that's a completely different business model than PE. So with corporate finance, it's more personal finance for companies. So think of it like FP&A. So you're basically, companies want to know, how long is it going to take me, for instance, what are my working capitals? What's my working capital situation look like? How long does it take me to collect from customers? So you want to basically, if it takes you 30 days to collect from customers, you maybe try to shorten it so you can collect the cash sooner. And with payables, you have to pay your vendors. So what does that look like? You need capital to be able to fund that. That's called working capital. So inventory management as well. So basically personal finance for companies. That's it, more corporate finance. It's completely, slightly different. Yeah. And then, you got your accounting if you want to do accounting as well. But accounting is very, very broad as well. You have basically audit and probably not as exciting as finance in my opinion, but it's important to understand because you really need to be able to understand it's a language, what really drives companies and how do companies report. Because here in America, I think it's mostly GAAP accounting, and in Europe, it's IFRS.
Thanks for exposing all those different avenues in finance, Ty. That was very clear. What led you to choose the path that you chose? How does one navigate between all of those different options when they're considering entering finance?
Yes, I think so. I think the way to think about it is, what's your end goal, and sort of work your way backwards. So mine was to be a CFO at some point in my life. So I knew that investment banking or management consulting would be it. So, but you've got different other avenues like working in accounting, so audit, or working it's tough. So if you wanted to do that, it would be tough to be a CFO, go work at a hedge fund, right? Because hedge funds, you're really trading paper, for lack of a better term. It's not a skill set where you're basically running stuff, running a company operations, running working capital issues. So if you want to be a trader, then you probably wouldn't have the skill sets to be a CFO. Yeah, and then another way to get in is to go work at a private equity backed portfolio company to really understand operations of business if you want to be a CFO. So what are your goals? What do you want to do? Think about it that way and then kind of work your way back. So private wealth wouldn't work in that sense because private wealth, you're managing people's money. It's not as technical. So that's the way I would sort of think about things.
Amazing. So definitely what stands out for me here, and this is what you've been sharing since the beginning of this interview, is if you are interested in finance, have an open mind, be curious, try it out, network, ask questions around, just to make sure that you're aware of what position and what other position and what they entail. What will you do on the day-to-day? What type of personality do they require? How do you match with that? What type of skill sets? And then don't worry if you don't have the skill set yet, you will develop it as you go, as long as you're ready to do the job. Now, Ty, tell me, what were your top challenges during your career so far, and how did you handle them?
Now, I would say the biggest hurdle for me when I started my career as an analyst was less about, I was so used to, being able to turn in assignments really fast and get stuff done. But you have to sit back as an analyst and review your work, take the 15 to 20 minutes to review your work. It's better to be 10 minutes late, but have it, no spelling errors, have it correct, versus being 10 minutes early and having the entire work product be riddled with errors. As an associate, another the biggest challenge was managing up and down. So I had to, because you have your VP basically reporting back to you and saying, hey, Ty, I need this output. I need you to basically get the analyst, because you're managing an analyst class. And you have to be able to manage that whole process and be able to take all this information. And you're basically a quarterback, essentially. You're expected to execute as an associate. So for me, it was a lot to be able to manage up and down. So I had people that demanding a lot out of me at the VP and MD, but also the analysts were expected to be mentored and be led through the entire process. So that was an adjustment for me. So being able to be a project manager, essentially, it's the same thing with restructuring, right? When I've been in restructuring now. So yeah, those are the two things that I had to basically get my head around.
Very helpful. Thank you so much for sharing. I will share a video in the info card above where I talked about a framework to help us, you, communicate a point across to an analyst and an associate or your boss or your manager, essentially how to have an awkward or difficult conversation and how to really convey and communicate your point across clearly. I'll link it above. Ty, you can also watch it and let me know.
Sure.
But yeah, thank you so much for sharing. I have one last question for you, Ty. When you hear about coaching, what comes up to mind for you?
Actually, we had at my prior firm, we did have coaching. So I think it's obviously important. I think you have to feel comfortable. It's a relationship and trust. So you have to feel comfortable being vulnerable to the person you're opening up to. But yeah, at my firm, we do have it. We have, I think first time we moved kind of, I was a lateral hire, so right out of business school. So I would meet with my coach I would say every other week, kind of going through, personal stuff, work stuff, what the workload is, talk about the staffer. I need to get staff on certain assignments. These are some of the things that I want to get staffed on. These are some of the skills I need to build on. And then at the mid-year review, we'd kind of check back on and kind of say, hey, Ty, did you improve on these things? And here's the feedback that you're getting from your project managers. And here's how, here's some suggestions that we can probably work on. And how do we turn this around? So it's a relationship. It's something that's very, I would call it sacred, but you have to be able to build trust with the person. And yeah, that's super important. It's been really helpful in my career. So
What did it help you achieve in your life and in your career?
yes, I mean, being able to manage a team and some of the, because if I wanted to get to when I was in basically, if I wanted to get to a director or in consulting or associate, my manager has been in that position, and I would ask him, hey, what skills that do you think I'm lacking that I could, basically, because you've been in this position before. What do I need to do? And that's something that I would always frequently bring up. And what are my skill sets over time? You sort of have a litmus test of what you're good at and what you're not good at, and you kind of reconcile those two. Your manager, your coach is there to basically guide you along and kind of be also when things come up for promotion, when you're not in the room in those meetings, he's going to be your biggest cheerleader as well, right? Because he knows the amount of work that you put over time. So you sort of need to have cheerleaders that are going to go to bat for you during the promotion, because it's typically a mid-year review and end of the year review. So your coach is one of the people that are pretty much going to go to bat for you at the end. So that's been the case for me. So
Ty, what's your last word? What would you like to share to the audience to help them build more successful career in finance?
Yeah, I would say career paths are not linear. So it's more important to, and especially in your 20s, to focus on a couple of things. Are you learning a lot? Are the people you're working with smart, interesting? Are you being challenged every day? And maybe, that's what I would do in your 20s. And in your 30s, you look up and say, okay, what are some of the things that because at that point, you'll be able to pick projects and be able to do things that are more that you want to do. But in your 20s, I would say focus on learning, focus on networking, and focus on working on interesting projects that are going to challenge you intellectually. So curious in your 20s. 30s, you can sort of maybe due to life circumstances, you can maybe dial in towards focusing on what you do want to do eventually. So if you want to lean towards a path of, like, I don't know, if you want to go to like private equity or corporate finance because you want more work-life balance, that's a decision you can make later. But initially, I would focus on learning.
Did you ever have to work with managers that didn't really train you or support you, or that were toxic? And if so, how did you handle it?
Yeah, I mean, there's times it's a competitive environment, especially in banking. The way you do work around that is you try to be as professional as possible, but you try to get a staffer to staff you on different project with someone that's going to be more aligned within your group. Because typically a staffer that staffs you on engagements. But yeah, it happened once and I brought it up and I wasn't staffed with the person again, but try to be as professional as possible. Try to make the most of the situation. But yeah, because obviously you're a junior person, but you try to not ripple any feathers, right? Try to be as much professional as possible, and bring it up later once the engagement is over with the staffer, and try to get asked to get staffed on different engagement with different individuals within your group.
Yeah, that makes sense. I like how you said to bring it up after the deal was done, after the engagement was over, because when you're in the middle of the rush, it is unprofessional to bring more problems to the table instead of solving them, unless it threatens your health or your safety in any way. Therefore, in the scenario, then you reach out to HR. You can also consult with a lawyer. You can talk to your head, the head of the team as well. These are other options. And obviously, as Ty mentioned at the beginning of this interview, stay proactive. When you find a job, it's always good to stay proactive and talk to other people in your field of interest, in other fields that are different or similar, so that you stay top of mind in your network to be able to capitalize on that network whenever, last minute you need to make a pivot, because you may or may not want to change at that time.
Certainly.
Absolutely. Ty, thank you so much for your time today and your insights.
Awesome. Thank you so much. I really appreciate the time.
Where can people find you? Go ahead.
No, so I don't have social media, but you can reach out on LinkedIn if you have questions or just curious about the process. I'm happy to do 5 to 10 minutes information calls, or just shoot me a chat on the link on LinkedIn. I'm happy to kind of because I used to be a student or think about a transition prior before, so I'm well aware of the process. I'm happy to help any way possible. It might be different in Europe than in the States here, but yeah.
Well, we may have people who watch us from all around the world, so I'm sure your insights will always be relevant to them. Thanks everyone for watching this video. As you noticed, that it was more of a finance-focused video. I hope you've enjoyed it. Thanks a lot, Ty, for being here and sharing your precious insights with us.
Thanks for your time. Cheers.